I bet you come from way down south. Now don't tell me, let me guess, you're from the town that I love best. Talk Memphis, I wish you would. Talk Memphis, you sound so good. Talk Memphis, high on the bluff. I swear I can't get enough listening to you talk that stuff. Talk Memphis, oh yeah, talk Memphis.
This is the Memphis Real Estate Hour on KWAM. And now, here's your host, Dean Harris.
All right, good morning, everybody. I am your host, Dean Harris. I'm with CrestCore Realty over on Summer Avenue. Thank you guys for tuning in here at AM 990 Memphis, 107.9 FM. And some of you may be online streaming the show at kwam990.com. The Memphis Real Estate Hour will concentrate on investing in Memphis real estate, and we will focus a little bit on our residential real estate market. We'll have local and national vendor partners of ours on the show from time to time sharing their knowledge on how to become an investor in Memphis or how to become a better investor in Memphis. We've got both listening, usually newer investors and some guys that have been around it for a long time. I do remind you every single show that I am an investor as well. If you have that old home that you need to sell quickly, or if you know somebody that has that home they need to sell quickly, give me a call, 901-619-6170. We can make you a cash offer on that home today. I've said this many times. I don't care where it is, what shape it is, or what condition it's in. We'll find a buyer for that home, or I'll buy it myself. Facebook Live, we're now on Facebook Live. We've been doing this now for several months. We've had some great feedback from it. We're introducing the show to people that could not normally hear us, whether it's on a national basis or even here locally. If you're in your car or you're at home in your office, actually don't watch us in your car. So if you're in your office at home or anywhere else, really just pick us up, turn on your phone, and we'll be there. If you guys have listened to any of the past shows and you wanted to hear some repeats, or you want something that caught your attention on the last show that we were doing, we store all of these on the Facebook page, the Memphis Real Estate Hour. You can just click on the video link there, and it will show a bunch of the past shows. Last week on the show, guys, we had Wendy Greenlaw with Chandler Reports. She came on and gave us some really good information, kind of our trends and what's going on this year, so we were happy to have her. She's with Chandler Reports. You guys can go to chandlerreports.com and check out all that information they provide us. It's an extremely useful tool for investors, so I would encourage you to do that. Dan Butler was also on the show. We were talking about your price, my terms, or your price, or my price, your terms. It's a very good topic, and I got a whole lot of good feedback from that from Dan. So you guys can check that out on the show's Facebook page. Today I'm going to have investment of the week. I've got 3 really good properties. I'll give you kind of at the bottom of the hour around 8:30. I have got Douglas Skipworth. He's on the show this morning. He is one of the owners of CrestCore Realty, and he is our broker over there on the brokerage side. So we're excited to have him on the show today. We're going to be talking about how to value rental property, how to finance rental property. If we got time at the end of the show, we're going to talk about building teams. You've probably heard Dan and I talk about a couple of these topics before, but I always think it's great, a good idea to get another perspective on it, kind of from the same background. So we're happy to have Douglas on the show today. So Douglas, welcome.
Hey, thanks, Dean. Glad to be here.
Absolutely. We're going to dive right into it and kind of go into this. So first topic is we're going to talk about is how to value rental property. And to me, you've got some appraisal background. I've got some BPO background, which, if you don't know, is a broker price opinion. It's not an appraisal, but it is along those lines. I show comps. I show neighborhood features and things that can help value a property. So I get this question a lot when investors call me from. I guess I always go to California because that's where a whole lot of them are at. So when investors call me, Dean, how much is this house? Oh, it's $40,000. Why do you think it's $40,000? Show me, where you came up with that. How can I determine that? They want to educate themselves. When you think of how to value a rental property, we've got some highlights here or some outlines. But what do you personally think when you because you're a property owner.
Right.
You and Dan have a
Yep,
nice
yep.
portfolio. When someone comes to you and says, "Here's a house," how do you go and look at it? Because when somebody gives me a price, a wholesaler or a seller, it's kind of they could tell me it's anything. They
Yeah.
could tell me the value of it's
Right.
$100,000 when it's 50 or whatever. How do you go through that analyzation? What do you start with when you're looking at buying for yourself?
Yeah, that's a good question. I kind of frame it, I guess, first with the, kind of what I would call like the successful investor model.
Okay.
And a successful investor model in my mind is someone who knows values, and then they find opportunities, and then they make deals. And so the key to investing is knowing that value. So picking a neighborhood, picking a part of town, picking a city in general, and learning values. So in that frame, valuation is obviously, the key, because that's how you determine if it's a good deal, how to make a good deal, how to make your price, our terms,
That's right.
our price, your terms. So with that, there are three valuation, kind of the technical appraisal background, where I kind of go back to the textbook of there's the income approach, the sales approach, and then the cost approach.
Right.
And so I kind of frame it up in that way to see where
Where it fits.
where it fits in there. And obviously in the rental business, it's more on the cost approach. Well, let me phrase that. It's more on the income approach or the sales approach. The cost approach being more new construction. With some build to rent, it's important, but
And we're having some of that.
yeah, for sure.
I saw a post the other day from a guy that we know. He was starting 22 new construction homes only for rentals. So it's amazing
crazy.
what people are doing from
Yeah.
that cost approach. So when you say cost approach, we're thinking the cost of the land,
Cost of the land
cost of the improvements, which is to build the
to
home.
build the home. Yep, which is labor and materials.
Right.
And the builder profit.
That's right. So builders, from an investment standpoint, who typically uses this? I guess new construction.
New construction guys, for sure. I mean, you were in new construction
Yeah.
back in the day, so
Man.
you know that. And insurance. That's that. From an investment perspective, the build to rent, 5 years ago and before, it wasn't a big deal, so it wasn't something that
That's right.
investors talked about. Only time they talked about it was when the house burned down, or when are they getting actual cash value, or are they getting replacement costs? A lot of times they'll get replacement costs for insurance, and that's when this comes in. You buy a house for $40,000, it's insured for $100,000, it burns down, you get a $70,000-$80,000 check. So that's
All right. So
that's
we got.
why it's important to the investors to at least understand it. It's it's not.
It takes a specific investor for that, I guess, because you got to be new construction, or you got to have something happen, like you just said, the house burns down.
Right. So again, it's a good thing for an investor to file away and understand. Maybe I don't know if you've had the insurance guys on here, but when you talk about what's actual cash value versus replacement cost is the gets into new cost, or the cost to rebuild. And so that's when you get into the new materials versus the actual cash value, when you take what it's worth minus the depreciation. So it's not something an investor is going to spend a lot of time with, but it's important. I mean, we have managing hundreds of houses, managing thousands of houses. We see houses burn down.
Yep.
We see trees fall on houses.
I think we had a lot of that recently.
Pipes burst.
When
you get this freezing cold weather. So it's important to understand it, but it's not. I wouldn't base my purchase decision on the cost approach.
On the cost approach. All right, let's move to income approach. This, to me, is where I see most of my buyers buying off of, if I'm phrasing that right. Most of my investors purchase based off an income approach. Let's talk about that. Economics of the rental property, rent and rental comps. That's where I go, personally.
Yep.
If somebody says, "Here, Dean, here's a house, $50,000 it rents for $800 a month," or whatever it is, I analyze what I would pay for a home based off of that rent. Or maybe not that specific renter at the time, but the market rent.
The market rent.
And that's how I suggest. I mean, I know appraisers don't do that, and my BPO background couldn't allow me to do that. But if you're using this for investment purposes only, to me, this is the best way to go.
Yeah, I mean,
just an opinion.
Right. I mean, investors are looking for yield. The majority of the that's the term.
Yep.
Gross yield, net yield.
Yep.
So they're comparing this to an investment in the stock market. They're comparing this to investment in a bond, a CD, or some other type of financial instrument, and this allows them to make that comparison, apples to apples comparison, based on I'm putting money out, I'm going to get a return on that, and hopefully I'm going to get my principal back. So hopefully I'm going to get my principal back. Hopefully I'm going to get my yield on that, and this is the way to kind of make them neutral against for comparison purposes.
So a lot of people say, well, how can you verify that? How do you go about doing that? We use a few rentometer, however you want to pronounce it. We use that. Zillow, I will give Zillow a little credit. As a real estate agent, we're trained in our mind to put down Zillow, and
that's right.
discredit them.
Yep.
But I will tell you, their rental comps are fairly accurate.
Sure.
Sometimes they're actually a little high, so the investors might like them. But Zillow rental comps aren't too bad at all. Property managers can verify rent. I know for one thing, if I can't figure something out, we manage 2,500 plus houses. I'll go down to our leasing agents and give them an address. Right. Hey, what do you think this will rent for? Yeah. They're the ones with boots on the ground in the field, dealing with tenants, dealing with these areas that they can get a lot more specific than I can, even on the streets.
I mean, you can use MLS if you have access, or your agent has access.
That's right.
You can look on Craigslist. You can, if you're able to drive the neighborhood, you can call for sale by owner. You can call the for rent signs that are active. Point. You can look on other property managers' websites. So finding the rental comp, which is part of it, the actual how much this is going to rent for on a monthly basis. I don't want to say it's easy, but it's a whole lot easier than it was 20 years ago because of the technology that's available. So you can get a pretty accurate. I mean, you can be halfway around the world and get a pretty accurate value for what you think that the high and the low in that market is. What seems like the market rate.
All right. So let's say we find our rental value.
Okay.
We found a house. We found out that it rents for $800 a month.
Okay.
Dan has his own way. You might have the same way, but how do you value the home then? I know we use a simple times.
I mean, there are all kinds of rules of thumb on how to do it, but you can the bigger pockets of the world have different calculators and rules of thumb. What you're really trying to do again is you're laying out money to get money in the future. So you're kind of taking a discounted of that cash flow. So how much cash am I going to get back over time and putting a discount rate on it to say, this house is worth $50,000, $70,000, $100,000, depending on how. It all depends on how much you're going to get back and what that discount rate is you're going to use, or that cap rate. So
that's right. What you're explaining right there is exactly what my main conversation with investors. Because some guys come to me and they say, I want 15% return. I want 8. I want whatever.
Yeah, everybody's different.
Everybody's different. So when somebody says, well, what would you pay? It might not be the same as what someone else would pay. Right? So I use it times 50.
Okay.
Right?
Great rule of thumb.
Yeah. I just take the rent and multiply it times 50, and that needs to be my all-in number. So sometimes you're going to have repairs factor in there, and sometimes you have some other items factor in there. But I'd like to go 50, Dan. That's one.
A lot of people use the 1% rule. If $1,000, $100,000. If $1,000 rent, $100,000 house.
I'm getting way more of that.
Yeah, a ton of that. I mean, again, they're all rules of thumb. It matters what. Most people, it's kind of the opportunity cost. It's like I could put my money to work over here, or I could put it to work in this house.
That's exactly right. I'm getting a ton more of the 1%.
Yes.
Out-of-state folks. Our local guys want to earn it a little bit more.
That's right.
They want it to be a little, I guess, because they know the market a little bit better and stuff. But my national investors typically stick to that 1 point return. So that's great. Income approach can be paired to stocks and bonds. You mentioned that. Property managers can tell you that rent. Let's see, economics of the rent. I mean,
expenses are an important part of the component of that, because that's really when you're taking your rent, which is again easier to find, and the expenses you can look up the taxes. You got a good feel for the insurance. You got a good feel for what the management fee is going to be. Then the maintenance. That's again different rules of thumb. Is it a newly constructed house? Is it a 100-year-old house? How much deferred maintenance is there? What kind of rehab are you going to do when you do it? Are you going to put a new roof, new HV system? So that's a harder factor as opposed to taxes, which are set for a year to 4 years.
That's right.
Insurance is going to be relatively the same.
Mm-hmm.
Same with management fee. So then you know it's a matter of how are you going to finance the property, whether you're going to have principal and interest.
That's right.
Some people might, some people might not. But again, most people exclude that from their net operating income. It's like all those operating expenses to get that NOI. That's a big term people use.
Sure,
NOI. In evaluation, the net
right.
operating income.
Right.
So.
We're live in the studio talking with Douglas Skipworth through CrestCore Realty. We're talking about how to value a rental property. We've talked about cost approach, income approach. Now the next one is sales comp approach. That is traditionally what people ask for. People meaning
that's right.
investors, homeowners,
Yeah.
retail buyers, commercial investors, anybody that's looking for something. The word comparable or comps is the first thing out of their mouth. What that is, if you're in retail, I can get on the MLS and you say, hey, I want to go buy a house in Germantown. I want to live on Main Street here, and there's, this house is for sale for $200,000. Dean, find out if that's worth it or not. And what I do then, go to the MLS, and I go and look on that street and the streets around it, what has been selling that's similar to this home. Mm-hmm. They've only been selling for $180,000, so we're a little overpriced. So that's one way to take a look at it. Investment properties, I find it harder to do that.
Mm-hmm.
There's not as many MLS transactions on this lower end.
Okay.
They're sometimes exchanged through private parties.
Yeah.
Wholesalers will grab them. Investors will sell it to other investors. So through the MLS, when you're talking about investment properties, I don't think it's the best way to find a true value. I don't get as much activity from some of my zip codes that I talk about from a retail standpoint. Agents oftentimes don't see it a value in selling a $40,000 house. That's not enough income for them to generate a business for themselves. So it's very hard for me to get true comps in some of these investment areas. So the traditional approach, this is similar, but that's how I come up with them from the retail standpoint. Now, if you're asking me how I come up with them for the investment, we look and see what we find. But Douglas, I'm getting turnkey comps in there,
right,
which they've sold prior, and that's not a true indication in my mind of what's going on in that specific market. So if you're out there listening and you're searching on Zillow and you're going through a zip code that's an investment zip code and you're finding comps that are 100,000, 120,000, and you're looking at something that costs 30, you ought to look at some of those differences. How do you look at that comp approach when it comes to that?
I mean, that's really hard because while I completely agree with what you're saying and how difficult it is, most people finance the property.
Yeah.
And the banks primarily use, and the appraisers primarily use for underwriting purposes, the sales comp approach.
That's right.
So they're looking at the comparable sales. They're not, they'll use the income approach as a secondary means, but primarily they look at that sales comp approach. So it makes it very difficult, especially if you have a wide range of values in a neighborhood because of, either wholesale to turnkey or actual retail sales. So it's real difficult if you're financing.
If you're financing, it's super hard. Why do you think, will the appraiser not use the cost approach because he's sticking his neck out there a little bit more, you think? But because I guess with a comp, he can lean on the comp and say, well, this is what's going on.
That's right. And I would guess, especially on the single family side as opposed to what we call the commercial side with the larger properties, income producing properties. So again, most of the 1 to 4 family, it kind of gets into the way the banks and the regulators do it. 1 to 4 family is considered single family. 5 and above is considered commercial. So 1 to 4 family is a traditional residential appraiser who, you think 80% plus of their work is owner-occupant kind of stuff. So that's their mindset, and that's where, or at least historically, that was kind of the number. So the banks are used to it. Everybody's used to the sales comp approach, so the income approach just takes a back seat. Now, on the commercial side, you're buying an 80-unit multifamily, they're 100% going to base it on the income approach. NOI, cap rate, so that and you're going to use a commercial appraiser as opposed to primarily a residential appraiser. But the sales comp approach is important. It's hard. you have to know it. Investors have to know it when they're financing, but it's probably not the best way to think of the value of your home to you personally, though that's the way it would be for the underwriting, for the financing. But if you're going to sell it, unless you're going to sell it owner-occupant or sell it totally rehabbed, turnkeyed again, it's hard to get top of the market.
Absolutely, in these areas. Guys, we're live in the studio this morning talking to Douglas Skipworth with CrestCore Realty. We're talking about how to value rental property. We just went through the cost approach, income approach, and sales approach. We're going to come back and talk about how to finance all of these. That's an enormous topic that I know you guys will be interested in. You're listening to the Memphis Real Estate Hour on 107.9 The Voice.
That's why I say, hey man, I shine, man. That's why I say, hey man, I shine.
You're listening to the Memphis Real Estate Hour on KWAM. We'll be right back after this.
Now, here's Mid-South weather from News Channel 3's Severe Weather Center. Brought to you by the Crescent Club, hosting the people and ideas that moved Memphis forward for nearly 30 years. Poplar and I-240. Call for a free tour at 901-684-1010.
Cloudy, windy, and warm once again for the Mid-South. Gusting southerly winds will push high temperatures to near 80. Scattered showers overnight. Temperatures fall to near 60. And north winds are back for Wednesday with pockets of heavy rainfall and localized flash flooding. Flash flood watches in effect for tomorrow. Your tax refund check is the start of getting a new ride. At CK Auto 5170 South 3rd, they'll help you finance your next car, truck, or van. I'm News Channel 3's Todd Demers. On The Voice, FM 107.9 and AM 990.
Griffin, Clift, Everton, and Mashmeyer, PLLC, is a full-service law firm with over 50 years of experience in the Memphis area. Real estate closings have continued to be the forefront of their law practice, which include residential, commercial, and development real estate transactions, drafting and negotiation of real estate contracts and leases, business information, preparation of wills, probate, and estate planning. Their firm represents a number of builders, developers, investors, and local lending institutions, and is approved to close transactions for most local banks and mortgage companies. In addition, they offer title search, title examination services, and title insurance through several well-established title insurance companies in the Memphis area, as well as Tennessee and Mississippi. They strive to offer services in a prompt and timely fashion, while advising and representing clients in a zealous and professional manner. Should their offered services be of need, please contact William N. Griffin Jr. or any of their attorneys at 901-752-1133. They can also be found online at www.gcemlaw.com or on Facebook.
Is it a good time to buy or refi? Is it a buyer's market or a seller's market? Are interest rates going sky high soon? Hi, I'm Ludi Calloway, the mortgage lady at iBank Mortgage. I tell my customers to ask questions, get answers. So join me every Monday morning at 8 and I will tell you what's going on in today's still changing mortgage world. Remember, most people think about mortgages a few times in their lives. I think about them every single day. Tune in Mondays at 8.
Investors or buyers, if you're looking for the best customer service and most competitive rates on a home loan, come to Brighton Bank. They offer a quick approval process, fast closing, and they even finance 85% of the purchase in most cases. At Brighton Bank, they work with every kind of loan: BAFHA, USDA programs, traditional conventional, financing programs, long-term fixed financial, and bridge loans made easy. When it comes to home loans, they mean business. Call them today, 901-758-1740.
CBS Money Watch, presented by ZipRecruiter.
Facebook is going old school to verify political advertisers' identities. The social media giant says it will now mail postcards to potential advertisers to confirm they are based in the United States. It is back to business on Wall Street today after the markets were closed Monday for President's Day. On Friday, the Dow rose 19 points, the Nasdaq fell 17. More and more U.S. corporations are paying employees to get their financial house in order. Wall Street Journal reports 17% of U.S. corporations with financial wellness programs offered incentives. The move reflects companies' concerns over employees' stress levels and productivity. And that's your Money Watch report. For more, log on to CBSMoneyWatch.com. In New York, I'm Diane King Hall.
ZipRecruiter, the smartest way to hire. ZipRecruiter's technology finds qualified candidates for businesses of all sizes. Try it for free at ZipRecruiter.com/CBS News.
You're listening to the Memphis Real Estate Hour on KWAM. And now, here's your host, Dean Harris.
All right, welcome back to the Memphis Real Estate Hour. I've got Douglas Skipworth in the studio. He is one of our owners and our principal broker at CrestCore Realty. So I'm happy to have him in here today. I'm going to go ahead real quick and get you the investments of the week. So if you guys get your pen and your paper out here, I'm going to give you 3 good properties that I've got. 2 of them on the same street. Let's start off with Sun Valley Cove, the 1000 block of Sun Valley Cove. This is in Memphis and over in 38109. A zip code that's actually, I wouldn't say bouncing back like it went somewhere, but a zip code that I'm getting a lot more traction with from investors, real close to Whitehaven, that Westwood area. This 1000 block of Sun Valley Cove, 3-bedroom, 1-bath home. It's occupied right now at $700, and the seller is asking $36,900. That's a good number. That's a good price, especially on an occupied home. So you guys ought to pay attention to this one. 1000 block of Sun Valley Cove, 3-bedroom, 1-bath. It's in 38109, occupied at $700, $36,900. Really, really, really like that area. It's growing on me a little bit.
It's a good deal based on the sales approach or the income approach?
I would say on this one it'd be an income approach because your rent is far exceeding the price of the home.
I agree.
If this is something, if you're kind of paying attention to the first segment, that Sun Valley Cove's a good one. You don't see a whole lot that are occupied at $700 anymore for $36,900.
I agree.
So, unless we get over there and something's just awful wrong with it, which that's not the impression I get. So you guys check that one out. Excuse me. 2 more here on Windermere, 38128, 4000 block. They're both right down the street from each other. The first one, 4217 Windermere, 3-bedroom, 1-bath. It is occupied at $695. It's $42,900. So you're looking at, a little bit difference there from this one in 38109. 4217 Windermere, 3-bedroom, 1-bath, occupied at $695. It's up in Raleigh at 38128, $42,900. I've got the second one on Windermere, 4000 block, same thing, 3-bedroom, 1-bath, also $42,900, and it's occupied at $750. So if you like close proximity and you want to get about $1,445 in rent for $85,000, you see, if you start putting them together like that and you start running your numbers, then you're looking at a good little package here. 2 on Windermere and 38128, both 3-bedroom, 1-bath, both are $42,900. One's occupied at $695, the other at $750. And then our Sun Valley Cove, guys, I wouldn't miss out on the Sun Valley. More and more, I'm looking at this. 1270 Sun Valley Cove, 3-bedroom, 1-bath, $36,900. So there you go, guys. If you have any questions about these that I gave you this morning, you can email me, dean@crestcore.com, or you can go to our website, www.crestcorerealty.com, and we post all of the investment of the week properties on there, as well as our 63 or 4 other listings that we've got right now. So check that out when you guys get a chance. Douglas, you had a story that you were going to hit about the cost of, or sales comp approach, right?
Yeah, as we were going to break, I thought about it. It reminded me of a time. This was probably 10 years ago, back in the heyday, when the market was really frothy, and banks were doing loans, that maybe they should or shouldn't be doing. But I got a loan from a national bank, a large multi-regional bank, and they sent an appraiser from an hour and a half away. So it was not a local appraiser. It was an appraiser who, they were bidding jobs. He probably, at the time, did it for the cheapest. He drove an hour and a half, and he didn't have access to our MLS. He didn't have access to Chandler reports.
Oh, my God.
So I knew at that time
this wasn't going to work.
This was going to be a heyday for me because he was going to use the top of the market comps. He didn't know the market, so he was just going to look at the comps and go, oh, well, this house is worth $80,000. even though I had
what you're
paid
saying.
$50,000. So I was able to get, and I got a line of credit on this. So I was able to get a line of credit for a lot more maybe than the house was worth to a local appraiser, just because of the sales comp approach, and an appraiser not in the local market.
Oh, that really worked out in your benefit.
I loved it as a borrower, and it's a long story. It was a 20-year HELOC that I got through a personal line for 20 years, and I mean, it's crazy. It's crazy.
They
It's
had
great.
a guy come in from an hour and a half away with no MLS access, no channel reports.
No.
So he just Zillow it?
I would just use public records, and just he couldn't tell what was a sale or a good sale or a bad sale, a retail sale, an investor sale, a turnkey sale. So.
Boy, I tell you.
But all that had to do because I was financing the property with a commercial traditional bank.
That's right. Great segue.
Okay.
Running right in here to financing.
There we go.
Dane and I have talked about this many a times, and how to finance in all these different ways. Some of these I've never used. Some of these my clients have never used. I'm going to lean on you for some of the info.
Well, hey, we're your client, and I've used all 6.
That's
well,
right.
5 of the 6.
That's right. Is there really one you haven't used on him?
That portfolio, I just haven't
Hadn't
done
that
that
route
yet personally.
So how to finance these properties, that's a question that I get frequently, especially when someone has used their cash that they have or that they've allocated to do this. Yet they're not done buying. They'd like to add to their portfolio, but they're strapped on what liquid and what cash that they want to put out there, the exposure that they have. Let's talk about some of these different ways. Traditional mortgage is one of these. I love this. We've got a client that does this, I believe. And so your Fannie Mae and Freddie Mac have a program.
That's right.
Where you can put 25% down. You as an individual can have 10 of these loans that go out 30 years.
Correct. Fixed rate, fully amortizing.
That's exactly right.
So a lot of benefits. There's some drawbacks, but a lot of benefits.
Yeah, benefit I would think is your low monthly payment.
A 30-year, low fixed rate, locked for the whole term.
Drawback, I believe, is going to be that you got 30 years to pay it off.
Well, I mean, some people want to do it. You could put it on a 20 or 15. You got to fit their box. You can only do 10. I mean, there's a lot of qualification. It's very difficult for a self-employed person. So there are hoops to jump through.
One of our clients, I believe, a funny story with this. You can only, like you just mentioned, you can only have 10.
That's right.
So I believe, and stop me when I read it, but he's got 10. His wife's got 10.
Yeah, the couple can have 20.
Doesn't his brother or his sister have 10?
He finagled a way to borrow through his brother and his mother and his stepfather.
And has 50.
50. They got it in there. It's in their name.
Yes.
The other relative.
Yes.
But he's borrowed through them and is paying them for that. But
he's managed to get.
He's managed to get that 30-year money at a fixed rate. Because we're in a rising interest rate environment right now.
Yeah.
I mean, a banker asked us last week, "Hey, what do you have maturing this year, next year, the next year?" Because when you go to refinance that, because we're doing the commercial bank loan instead of that traditional, so the rates are going to go up. Our monthly payment is going to go up.
That's a good banker partner.
It is a good banker partner.
If he's looking out for you like that.
Yeah, absolutely. So, but this you don't have to worry about the refinance interest rate risk. It's locked in.
So it's appraisal contingent, usually inspection contingent as well. I would imagine they're.
But if you got an out-of-town appraiser.
Yeah, no kidding. That's driving in 90 minutes here.
You get no problem on the value.
That's right. So Fannie Mae, Freddie Mac, you can do 10 per person, 25% down. You can take it out 30 years. I think Douglas mentioned you can go shorter. And then, like we said, we've got somebody that's a client of ours that has utilized this and done this and gotten 50 properties. So please don't call me after the show saying, how can I get 50 of these?
Right.
We'll have to let you figure that out.
That's
but there's a way that you can for sure get 10 for yourself and your spouse. So that's traditional mortgage that you can get for an investment property. Commercial bank loan, I know you guys have got some experience with this. Let's talk about a commercial bank loan. You've got a couple of banking partners.
Yeah, a ton. And this is the bulk of how I've personally borrowed from that house I was telling you about with the large regional bank to local community banks. The community bank partner who asks, "Hey, what's refinance? What do you got maturing in the next couple of years?" It's underwritten based on really the relationship. So they care about where you work, what do you do, what are your long-term goals, what's your experience with this, who are your partners, your business partners, whether it's an equity partner or a lender or an agent or a insurance company. They care who's your property manager.
Sure.
There is more of a story, whereas that traditional, it's like if you fit in their box, great. If not, you don't.
I was just going to use the example of Wells Fargo, a big company. I mean, they're going to key your information in and push enter.
That's right.
And if there's a big green light that shows up, then you're good to go.
You're correct.
And if there's not, you're not. With a commercial bank loan, you're going to sit across from this person, have a conversation, let them know what your plans are, what some of your goals are. I'm sure they're going to want to know kind of what you're looking out into the future. Make a business decision based on that information.
Absolutely. Yeah, that's right. It's a relationship.
Sure. Local regionals tend to do this, and your experiences have been very good with this.
Oh, it's been great. Again, there's some drawbacks. The drawbacks, it might be a little bit higher rate than a traditional mortgage. It's definitely going to be a shorter term. So you're not going to get a 30-year mortgage with a 30-year amortization. So it's probably like a 5.15 or a 5.25-year maturity on a 20-year amortization. Mm-hmm. You might get lucky and get a 10.20 or a 10.10 or something where you can lock it in, but they're trade-offs.
Yeah. Every if I'm right with a commercial bank loan, it's every 5 years or is it 5 years that they want to refinance.
3, 5. 7, 10 is about as long as I've seen one go, but usually that's like on 10-10 or something.
Why do banks do that? To protect themselves for
because it's how they're borrowing money. They're borrowing on CDs or deposits or other short term. They're trying to match their funds. They don't want to get locked in.
And this is some of what we've talked about in the past about, if we have time, we'll get to this building a team. This is, to me, if you're going to build a portfolio of rental properties, is one, if not the most important partner to have.
Man, to me, deals. This business is all about deals, financing, and management. Get an agent like Dean Harris, you got the deals. Yeah. So then it's financing, and it takes it's a capital-intensive business, and it just takes a lot of money. Unless you get that money tree, the money growing out back. Yeah, you got to have a financing partner. And so it's good to have all these sources, whether it's a traditional mortgage, commercial bank, hard money, private money. Yeah. Talk some more about those. Seller financing. They're just, you got to have access to that money.
And I think if you're smart, you'll utilize all this.
Most investors, if you're a professional investor, I don't know if that's the right term, but if you're looking to do this for the long term and you're trying to build a portfolio, then you're going to explore all avenues. Just like you're going to find deals on the MLS, you're going to look for wholesalers, you're going to look at off-market deals, for sale, any which way you can get referrals and find deals.
I'm live in the studio talking with Douglas Skipworth of CrestCore Realty. We're talking about how to finance these deals. Traditional mortgage we've talked about. We just touched on commercial bank loan. The next one is the most popular from an investor standpoint that I've been getting here recently. Okay. Hard money.
Yep.
What's hard money to you? A lot of people, there's some different definitions. What's hard money to you?
Hard money to me is it's based on, it's kind of the traditional asset-based lending, where the lender is looking to the collateral as a prime, as kind of the value and as the loan, as opposed to looking at the borrower. So they don't have to know the borrower. You don't have to fit in their box or have that relationship like we talked about with the traditional commercial bank. It's more of, hey, does this house fit the lender? Can the lender, underwrite it such that, hey, I'll loan it this. They're going to charge a higher rate. It's going to be a shorter term, but they're going to feel comfortable. Even if they don't know you, even if you're not as credit worthy.
The borrower, to me, and this is irrelevant. They don't.
That's a great word.
Particularly care.
They don't particularly care.
They want you to pay, but if you don't, it's a simple foreclose, and they got a property cheap.
That's right. They're going to do some due diligence. You got to have a little bit of credit worthiness, but
not as much.
Not as much.
I gave you an example. I had a property over in Berkeley that I was presented with this week, and I was looking at buying it. And I was going to use a hard money lender. The seller wanted $41,000 or so, and my hard money guy went over there and said he'd give me $31,000. So we were $10,000 off. That's not a deal that I was going to move on. The house was worth more than $31,000, but him in his position, he had to be under what he thought he could sell it for to secure himself. Because although he knows me and knows I'll pay him, he's running a business and did not want to extend that price or that lending amount up to where the property, in my mind, was worth.
Okay.
So he backed out of that one. He didn't want to do it. So you're going to find it's easier to get that loan, but you've got to have a better property.
Right.
You know what I mean? Like your property or the asset has got to be more valuable than you as a great credit or a great borrower.
Or you got to be willing to put some more money in the game down. You know, this has been used from a lot of out of the country investors.
Yes.
That can put a chunk of change down, get a hard money loan because the hard money lender, like your guy, was just looking at the asset. Whereas a commercial bank and a traditional mortgage, they're going to frown upon is a strong word, but they're not looking favorably upon international borrowers.
Well, they're hard to get them. It's hard to track if they don't,
right.
if they don't pay, which is unfortunate. I wish there was a different way to do that. I feel like I could sell, another 10 homes a month. But yes, you're right. It's hard to go get them, even if they're Canada. I mean, even if it's close, it's still hard to go track somebody down if they don't pay.
So hard money lender's a great alternative for those guys.
So we just covered hard money, commercial bank loan, traditional mortgage. Private money loan is the next one we've got. This for some people is the most uncomfortable one because you got to go to your friends and family and ask for a private loan. If people are out there listening right now and they're thinking, man, I've got uncle,
that's right,
that's over here and he's got a stack of cash, and what are some of the best ways in your mind? And I don't know if you've ever done one of these, but what is the best way to go to that person? And other than, hey, can I borrow money for a house? Take them, in my mind, take them the property, take them, all the statistics. Go to it and have a business approach about this, because I guarantee there's some people listening right now that have got that person in their life that they could go to and borrow. What are some of the things, because that if someone came to you that you would be looking for in a private loan situation?
Yeah, and we have done private loans, got clients who do private loans, and I'd say the key would be some type of track record, because you wouldn't want to use this going out, starting out of the gate. No. Just because there's too much risk initially. Is this going to pan out? Am I going to do this? But once you get a track record, once you've got some experience under your belt, then this can be a great tool if you have that person in your life and can go and say, here's what I'm going to do. Here's my history of repaying loans. Here's of my house is performing, and here's what I'm going to do. And you'll find that people want to invest in people they like.
Yes.
Every time. Family members want to see you be successful, and then get a return on their money. They're looking to put money to work. Especially people who have some liquidity.
Yep.
They're looking to put it to work with something they can trust, somebody they can trust that looks like some type of not necessarily a guaranteed return, but a predictable return.
And they've got the property to lean on as well.
Yeah, and you can use a closing agent or attorney to get this drawn up properly. Yep. So it's a legit means. I mean, there's so many different ways to do this. We have one client who had a relative with a large investment marketable securities portfolio, and then that person was able to pledge that as collateral to get that person a line of credit. So they got a 6-figure line of credit to buy houses on somebody else's stock portfolio.
Well, that's creative.
Yeah.
That really is.
And then they're just paying the interest, and maybe they're paying that person a note, but somebody's investing in, there's so many different ways to finance property. If you get creative and look at it.
That's private money loan, guys. So let's take a real quick break. We're going to come back and finish this up. We got portfolio loans and seller owner financing loans. You're listening to the Memphis Real Estate Hour on 107.9 The Voice.
You're listening to the Memphis Real Estate Hour on KWAM. We'll be right back after this.
Now, here's Mid-South weather from News Channel 3's Severe Weather Center. Brought to you by the CrestCore Club, hosting the people and ideas that moved Memphis forward for nearly 30 years. Poplar and I-240. Call for a free tour at 901-684-1010.
Cloudy, windy, and warm once again for the Mid-South. Gusting southerly winds will push high temperatures to near 80. Scattered showers overnight. Temperatures fall to near 60. And north winds are back for Wednesday with pockets of heavy rainfall and localized flash flooding. Flash flood watches in effect for tomorrow. Your tax refund check is the start of getting a new ride. At CK Auto 5170 South 3rd, they'll help you finance your next car, truck, or van. I'm News Channel 3's Todd Demers. On The Voice, FM 107.9 and AM 990.
Investors or buyers, if you're looking for the best customer service and most competitive rates on a home loan, come to Brighton Bank. They offer a quick approval process, fast closing, and they even finance 85% of the purchase in most cases. At Brighton Bank, they work with every kind of loan: BAFHA, USDA programs, traditional conventional, financing programs, long-term fixed financial, and bridge loans made easy. When it comes to home loans, they mean business. Call them today, 901-758-1740.
Griffin, Cliff, Everton, and Mashmeyer, PLLC, is a full-service law firm with over 50 years of experience in the Memphis area. Real estate closings have continued to be the forefront of their law practice, which include residential, commercial, and development real estate transactions, drafting and negotiation of real estate contracts and leases, business information, preparation of wills, probate, and estate planning. Their firm represents a number of builders, developers, investors, and local lending institutions, and is approved to close transactions for most local banks and mortgage companies. In addition, they offer title search, title examination services, and title insurance through several well-established title insurance companies in the Memphis area, as well as Tennessee and Mississippi. They strive to offer services in a prompt and timely fashion while advising and representing clients in a zealous and professional manner. Should their offered services be of need, please contact William N. Griffin Jr. or any of their attorneys at 901-752-1133. They can also be found online at www.gcemlaw.com or on Facebook.
Is it a good time to buy or refi? Is it a buyer's market or a seller's market? Are interest rates going sky high soon? Hi, I'm Ludi Calloway, the mortgage lady at iBank Mortgage. I tell my customers to ask questions, get answers. So join me every Monday morning at 8 and I will tell you what's going on in today's still changing mortgage world. Remember, most people think about mortgages a few times in their lives. I think about them every single day. Tune in Mondays at 8.
You're listening to the Memphis Real Estate Hour on KWAM. And now, here's your host, Dean Harris.
All right, welcome back to the Memphis Real Estate Hour. We got a few more minutes here. We've been talking. I'm live in the studio with Dan. I'm so used to having Dan here. Yeah. I got Douglas Skipworth with CrestCore Realty. He is one of our owners as well and our principal broker. We've been talking this morning about how to value rental property. We went through that, the cost approach, income approach, sales comp approach. So we went through several different ways that you can do that. We've been talking about how to finance them. We went through traditional mortgages, a commercial bank loan. We talked about hard money. You guys have heard us on the show talking about that before. Right before the break, we hit private money loans. And then here in this last little segment, we're going to talk about the last two, a portfolio loan and a seller or owner financing. Tell me a little bit about, I haven't had any personal experience, or if I've had any investors, it's been very few, and I probably didn't even know what they were doing, but portfolio loans. Talk about that.
So when the market collapsed, 10 years ago, and the hedge fund saw this opportunity and the private equity money to get in,
Yep.
they saw the opportunity to buy up all these houses. Well, when they got into it and bought tens of thousands of houses. I mean, the largest single-family owner, Invitation Homes, is 80,000. But Blackstone Group, they noticed that the financing is so difficult. So they said, hey, here's an opportunity to put billions of dollars to work. So they created these financing companies. The largest and probably the biggest and best one out there is called CoreVest. Used to be Colony American Finance, but it's now CoreVest, and we know a lot of folks out there. And so they are in business to fund single family investors. That, and as time goes on and as things evolve, they will become a real competitor in this industry. They started as like it's got to be at least 5 properties, so kind of a portfolio.
Yeah.
But they're getting more competitive. But it's more for the quote sophisticated investor, somebody with at least 5 properties and looking for but they can do long-term money at lower rates, but it's based on the properties as opposed to the borrower. So it's trying to take some of the benefits of commercial, the community bank loans, and the traditional mortgages and put them together in a vehicle that's nationwide.
And
for all of us.
The lender is these large property owners.
The lender is it's entities that they've created. So it's a financing entity they've created. But then they're going to bundle it up. That entity's going to bundle it up and sell it off to Wall Street. So that's how they're able to get the cheap money at the long term. So
portfolio loans. I don't know how many of you guys out there have these. If you've got questions, let me know, and I'll put you in touch with somebody. That's
we know
way
several
more
folks at
complicated.
It is, but it isn't. So the folks at CoreVest are great. We love those guys.
Happy
They're
to
happy to
work with
walk through. They've been to our office.
All right, seller Dan, you guys love this one.
Seller financing.
Dan loves this one.
I mean, it's great. It's a win-win.
Yeah,
Dan,
seller owner financing. Talk about that a little bit. Y'all have used that.
Use it any time we can. So oftentimes. Again, it's like you got to come up with money somewhere. So you don't have to. Usually, when a seller is willing to finance all or a portion, all is great because then you don't have to jump through the hoops of the banks, of the traditional lenders. The seller is able to get, unload their property but still retain the monthly payment and the interest. So it's a good fit for sellers who are in that position if they don't owe a lot and they want. They don't know where they're going to invest their proceeds from the sale. Yeah. But and on the flip side, it's really good for the buyer or the borrower because again, it's not necessarily it doesn't count as one of your 10 for Fannie Mae, and it's not on having to go through credit committee with the bank, and you're not having the high rates like you do with the hard money lenders, nor are you tapping into your private lenders. You're not using up your availability because your private lender and your bank, your commercial bank, they're going to cap you at some rate, whether it's $500,000, $1 million, $2 million, $5 million. At some point, they're going to turn you off. But seller financing is usually a per deal thing. And
it's a similar thought process if you're the seller to hard money lending.
It's a very similar process. Worst case, they take the property back.
They
already know the property.
Back.
They usually don't want to do that.
Yeah.
But it can be a good win-win.
Dan last week was on the show, and we were asking him about your price, my terms, your terms, my price. I get that confused. But Dan, he said that oftentimes
this is where
that comes in.
Yeah, your price.
That's right.
Then give us seller financing.
That's right.
Our price, then we'll go get a loan and
that's right.
Make it your terms.
Hey, thanks for coming on.
I love
Douglas Skipworth,
Anytime.
guys, CrestCore Realty. He is one of our owners and brokers, property owner. If you guys have any questions about today's show, I'm going to post it here on the Facebook page here right after the show. Give me a call, 901-619-6170, or you can email me at dean@crestcore.com. And check out that website, too, www.crestcorerealty.com. Thank you so much for listening. We'll be back here next Tuesday on the Memphis Real Estate Hour, 107.9 The Voice.